I think the big financial story this week is going to be the Dow Jones Industrial Average closing above 50,000 for the first time ever. You know, Donald Trump has now promised to double that to 100,000. But 50,000 on the Dow is not really that significant when you consider that gold is almost 50,000. In fact, gold settled the week just below, I think, 4,957. So it's close enough to 5,000. But if you divide the price of gold by the Dow, that's 10. The Dow is only worth 10 ounces of gold. Back in 1999, it was worth more than 40 ounces of gold. So a 75% decline in, 26 years, 27 years? That is a major bear market. The reason the Dow appears to be going up is because the value of our money, U.S. dollars, are going down. So you need more dollars to buy the Dow, and you need even more dollars to buy an ounce of gold. This is what the media doesn't want to pay attention to. This is what the Trump administration doesn't want anybody paying attention to. Inflation helps the government in many ways. Obviously, it's its silent partner in tax revenue. It can tax the public without taking their money. It just takes the purchasing power away from their money. But it also creates a false sense of affluence because the numbers go up, the numbers get bigger. And so people think they're richer because they own a 50,000 Dow. But in real terms, they're poor. In fact, the whole affordability crisis that both parties seem to acknowledge that there's an affordability problem. They just argue over who's to blame. The Democrats are blaming it on Trump. Trump is blaming it all on Biden. Both parties share the blame for the affordability crisis because inflation has been something that both parties have agreed on. They've both believed in creating inflation. In fact, Donald Trump brags about the big, beautiful bill, which is extremely inflationary. He cut taxes on tips, on overtime, on Social Security. He made interest loans on cars tax deductible. All of this simply replaced taxation with inflation. Consumers are given more money to spend because their taxes are lowered, but government spending goes up. The government spends more, consumers spend more, but nobody produces more. The difference is covered by the Fed. It's inflation. And when you go and you buy products, you pay higher prices because the government got bigger. The reason there's an affordability crisis is because government is so expensive. The cost of all that extra government is built into the price of everything that we buy. So the reason things are expensive is because you're also paying for government when you do your shopping. And so that's what's making everything unaffordable. And that's why it looks like the Dow is going up, because our money is going down. At the root of this so-called affordability crisis is the loss of value of the dollar. You need more dollars to buy things. And if you don't have more dollars, well, things become more unaffordable than they were. And because the dollar is going to keep losing value, in fact, it's going to be losing value even faster in the future than it has in the past, the affordability crisis is going to get much worse. Now, today we had this huge rebound in everything. And ironically, I think it was led by crypto and Bitcoin. Bitcoin was up 10% today, one of its biggest up days. Strategy stock was up 25% in one day. Now, the financial media wants you to believe that this means that, hey, it's a new bull market, everything is great, buy crypto, buy Bitcoin. There's an old saying about bear markets, they slide a slope of hope, right? That's the opposite of the bull market that climbs a wall of worry. During bull markets, the biggest moves tend to be down in single days. That's why we've seen some huge drops in gold and particularly silver prices in recent weeks. These are big drops in a bull market.
Peter Schiff says the biggest story right now isn't the Dow hitting 50,000. It's what that number is hiding. When the Dow closes at 50,000 and gold is sitting near $5,000, the entire US stock market is only worth 10 ounces of gold. Back in 1999, it took over 40 ounces. That's a 75% collapse in real terms, and almost nobody is talking about it. The Dow isn't soaring, the dollar is shrinking. Inflation is manufacturing a false sense of wealth, masking a deep affordability crisis that both political parties quietly depend on. And while media cheers rebounds in stocks, crypto, and Bitcoin, Oliver warns these violent rallies are exactly what bear markets use to trap late buyers. If you're measuring wealth in dollars, you're already losing, and what comes next accelerates that loss fast.
They're designed to scare you out, to get the weaker longs to throw in the towel and sell their gold and sell their silver. Right? It tests the metal by trying to scare people out, trying to get you to throw away a winning hand. That's why I've been doing a lot of these updates, and I've been on X encouraging people to buy these dips. In fact, yesterday, when I posted on X, silver hit $67, I believe, 67 after having traded 121 a couple of weeks earlier. Now, it was up today. It closed about 77.65, which, is a nice day up, but still way down. But the media is still talking about the silver bubble and how the silver bubble popped, and it was crazy that silver went to 121. Look, it was a bit crazy how quickly it went to 121. But what's even crazier is that it took that many years to get to 121. It should have been there earlier. And it will be there again. It will be there a lot sooner than people think. But the media, again, is trying to scare people out of gold, trying to scare people out of silver. Meanwhile, I think what's going to happen before we hit a new high in gold or silver, I think we're going to hit a new high in gold and silver mining stocks. They were up nicely today, about 5.5%, 6%, but they're still way off their highs. But given that gold and silver are still way off their highs, silver is what? Got to be like 20% off. Gold's still about 10% off its highs. I think as they make new highs, the mining stocks will make new highs first, because I think one of the reasons that investors were so reluctant to buy the miners is they were worried about a big drop in the price of gold or silver because they kept rising. Well, now we've already had the big drop, right? It's now behind us. And so I think people ultimately won't be afraid of another drop when the drop already happened. And I think we'll have a bit of a slower rise this time that'll be more sustainable. And I think that will, give a good opportunity for the mining stocks to get some real traction. So people who are interested in getting involved in those should definitely do so, and should check out the separately managed accounts at Euro Pacific Asset Management, and also check out our Gold Fund. EPGIX is the symbol for the Gold Fund. But the opposite is happening in Bitcoin. Bitcoin is in a major bear market. In fact, at its low yesterday, Bitcoin traded below 60,000. That was better than a 50% decline from its record high of 126,000. Now, today, Bitcoin was up 10%, and it's back just above 70,000. But it still had, I think, its worst week, down about 15% on the week, despite the 10% rise today, the worst week since 2022. But the media wants you to think that this is a significant rally. Again, in a bear market, the biggest moves are up, the opposite of a bull market. Because if the bear market is sliding a slope of hope, today's rally gives people hope, false hope. People are relieved. Oh, I'm glad I didn't sell yesterday. I'm glad I held on. Look, we had this big rally. we're back. We're going to the moon, right? It gets you, helps you build a false sense of confidence. You're now hopeful that the worst is over. You rode it out. Now you just got to hodl. Well, the next thing you know, we're going to be making new lows. In fact, one of the interesting things about the Bitcoin decline is how orderly it's been. We haven't had any major, like 5 or 10 minute, 10% collapses, which have happened quite often with Bitcoin. You get one of these flash crashes, there's like a panic, and there's a big drop. This has been a very orderly decline. I think where there might have been some panic was in silver. Silver prices, there was panic, not Bitcoin. And in fact, one of the reasons that I think that the price of silver was down so much yesterday, it was down, I don't know, like 20% in one day. There was no real news that would have affected it. What I think affected silver was margin calls in crypto. Now, there may have been some in silver as well, because some silver speculators who maybe put their positions on more recently got caught up. But I think that a lot of the margin players who own a lot of crypto-related assets also owned gold and silver-related assets as part of the de-dollarization trade, right? A lot of people think that that trade includes gold and silver and Bitcoin. Now, I don't think Bitcoin is part of that, right? It's got nothing to do with it. It's a market unto itself. But the fact that people believe that means that there are a lot of traders out there that have positions in both assets. And if they had those positions on leverage and we had a 50% drop in Bitcoin and we also had a big drop in silver, right? It's likely that they had margin calls. And it's also likely that it was easier to dump their silver than their Bitcoin. Because I don't think that there was enough liquidity if they had bigger positions. Now, clearly they moved the silver market by getting out of silver, but they would have moved the Bitcoin market even more. So I think there was some forced selling. And of course, you know, the traders can see that. They drop the bids. They know that there are sellers that have no choice, so they back away. And whoever sold out yesterday because they had no choice got a lousy price. And that's why I don't encourage any of my clients at my asset management company or my customers at Schiff Gold to go on margin. It's precisely because of days like yesterday where you have big drops and people don't have the staying power and they're forced to sell. And they turn a temporary paper loss that would ultimately be meaningless into an actual realized loss that means something. So I think that what happened today in Bitcoin is the dead cat bounce, is a bear market rally. Same thing with strategy stock, right? Strategy stock, as of yesterday, was down more than 80% from its peak price last year. 80%. Yet the stock was up 25% today, 25% gain in one day. But despite that 25% gain, it's still down 75% from its peak. So it barely moves the needle from down 80% to down 75%. But again, that's a bear market rally. Strategy is going lower. In fact, one of the biggest tells about what's going on there is their average cost on their Bitcoin. Their average cost is just over $76,000. And even though we had a 10% rally today, Bitcoin is barely above 70,000. So MicroStrategy is down on its Bitcoin that it's been buying over the last 5 years. Imagine if Strategy had bought gold or silver instead of Bitcoin, how much more the company would be worth, because they actually would have had a big gain on their investment. Instead, they lost on their investment. But of course, had Michael Saylor told people that he was going to buy gold or silver with the money he got from selling stock, he wouldn't have been able to sell all that stock at a premium because nobody really wanted to buy gold and silver. They wanted to buy Bitcoin because they thought it would have a great return. Well, they thought wrong. It had a lousy return. In fact, if Saylor had just put all of his money in a money market, remember, his big pitch on why he needed to buy Bitcoin was that he was losing all this money to inflation. He couldn't just leave his money in cash and earn 4 or 5% interest because inflation was higher than that. And so he had this big problem. What am I going to do with all my cash? Because I'm getting hit by inflation. Now, the obvious solution was buying gold and silver. Had he done that, he would have had a great inflation hedge. But instead, he came up with a harebrained scheme of buying Bitcoin. And not only did he not keep up with inflation, he didn't even keep up with the money markets. He didn't even keep up with taking his cash from his balance sheet and stuffing it under his mattress. He lost. He has fewer dollars. After 5 years of buying Bitcoin, Strategy has less cash to show for it than if they had done absolutely nothing with their money. So he made the problem that he claimed he had even worse with his cockamamie solution. Meanwhile, I bet you one of the reasons that Bitcoin rallied so much today is that Strategy was a big buyer. We'll find out on Monday, as we always do, how much Bitcoin Strategy bought. But I bet they bought a lot of it, and they did it all today, right? But by next week, I expect the price of Bitcoin to be lower, maybe quite a bit lower. The same thing with Strategy. But all this, I believe, is going to be bullish for gold and silver. Because I do think that for many years now, the Bitcoin, promoters have created a cloud over gold and silver. That Bitcoin was being promoted as superior to gold, not just digital gold, but something that's better than real gold. That whatever you think real gold is going to do, digital gold will do it better. And so people were buying Bitcoin who might otherwise have bought gold because they thought they were doing something smarter, something better. And the fact that gold went sideways for so long just reinforced that idea because it was being reinforced by the market itself. Gold was doing nothing and Bitcoin kept going up. So that was validating the thesis that gold's time had passed and the new times belonged to Bitcoin, right? Gold was dead, long live Bitcoin, right? And I kept saying, no, that's not the case. And that was proven last year when the de-dollarization trade really came into being on Wall Street. People appreciated why de-dollarization was taking place, why it was just getting started. And you saw the big move up in gold and a corresponding decline in Bitcoin. And in fact, when gold finally had that big correction, all the Bitcoiners came out and said, aha, now it's Bitcoin's time. All the money that was coming out of gold and silver, now it's going to rotate into Bitcoin. And you know what happened to Bitcoin? Then it collapsed again. So Bitcoin went down when gold was going up, and then it went down when gold was going down. That means the bubble has popped. The only question is, how much longer is it going to take the air to come out?
What you're watching right now isn't a bull market celebration. It's a currency illusion. The Dow at 50,000 doesn't mean Americans are richer. It means the dollar buys less. Measured in gold, US stocks have lost over 75% of their real value since 1999. Inflation isn't a side effect. It's the mechanism. It creates a false sense of wealth, hides an affordability crisis, and quietly transfers purchasing power away from anyone holding paper assets. Meanwhile, violent sell-offs in gold and silver aren't weakness. They're shakeouts designed to scare weak hands out before the next move higher. As Peter Schiff makes clear, real wealth doesn't disappear quietly. It's taken slowly through dilution, leverage, and distraction. And now that you understand what's really happening here, there's one more piece you need to see, because in the next video, we break down where this wealth is actually flowing, who's positioned ahead of it, and why the next phase catches almost everyone off guard. That video is already on your screen. Watch it next.